Well, good evening. It is Tuesday, February 10th at 6:40, and Bitcoin is pretty much exactly where you'd expect it to be between 68,000 to 69,000, which is where it spent most of the day today. Yet, if you looked on X for any length of time, you will see some version of this chart telling you that because in 2018 after the 19K high and in 2022 after the 69K high, it dropped 84 and 77%. That, of course, the trend line says this year we need to drop down to somewhere below 40,000 into the 30s. So that's what people are saying. It's hard to understand just how statistically insignificant this stuff is. Yet it's really hard to understand how many people actually believe it. But let's try to put this in context, shall we? So, the first thing to understand is in 2018, we had just come off a huge rally. There was no way in the United States to express a short opinion on Bitcoin until the CMEs launched futures. As soon as they did, it started to happen. At the same time, there was massive arbitrages going on between exchanges. We founded CoinRoutes in that era. And we know that while you think it was 19,000, the truth is it never had to pay more than 17,000. Never. Because it was offered there either on Kraken or Bitstamp when Coinbase was printing 19,000. Now just think about that in your head. We're talking about over a 10% difference in the arbitrage just in the United States. If you go outside the United States, looking at the Korean exchanges, that number was even bigger. So it was an incredibly inefficient market. And the fact that it corrected, well, that's really not all that surprising. So onward and upward we go to 2021. 2021, we saw a bunch of things happen. That was the year that Paul Tudor Jones called Bitcoin the fastest horse. That was the year that there was there was a China ban on mining. We saw we saw it when it went to 60,000 the first time, by the way. The funding rates were insane. You basically had to pay funding rates of around between 50 and 100% in order to borrow Bitcoin, in order to buy it and go long on the perpetual swap exchanges. It was that crazy. And it stayed that way for about 3 weeks before it finally gave way. Then it crashed and then it rallied all the way back up again the same way, another FOMO rally. And then a persistent bear market ensued after that. What was the trigger for the persistent bear market, you ask? Well, it started with Luna when the depegging event on UST happened and $60 billion was lost throughout the system. That caused financial stress. At the same time, GBTC, the Grayscale Trust, went to a discount, trapping many, many people who had bought it when it was at a premium and hoped to be able to sell it at least flat, causing that trade to be dubbed by some people the Widowmaker. Now, that plays very importantly into the next bit of the chain of events, because the next thing that happened was Voyager and Celsius went bankrupt. Celsius went bankrupt because they couldn't meet yield. Now, what did I mean by yield? You used to be able to borrow Bitcoin. Remember, I told you that there was enormous amount of money being paid to borrow Bitcoin, to be able to buy Bitcoin and buy it on margin. And so if you lent it out, you made money. But that disappeared. And once that disappeared, they could no longer make their yield, so they had to do something else. Well, Voyager decided that they would give a 15% loan to 3 Hours Capital, who had basically put all their money on the red of the roulette wheel that the GBTC premium wouldn't continue to widen. Well, they lost. They couldn't pay it back. Poof, went those assets. Celsius tried to be smarter. They were prop trading. And for a while, they did okay until, of course, inevitably, they tried to make too much money, took too much risk, and then they collapsed and they went bankrupt. And all of that caused forced selling of Bitcoin. We went throughout the fall and it started to fall even more. And then CZ, seeing the opportunity, took the kill shot on FTX because Sam had stolen his customer funds, his Bitcoin, Ether, etc., and replaced them on the balance sheet with his own coins, FTT. So once FTT's valuation dropped sufficiently that they couldn't back their assets, they were dead. Now, people claim that that was CZ's fault because they shouldn't have done that. Well, look, at the end of the day, there was still theft that went on. And when FTX collapsed, somewhere in the neighborhood between half and three quarters of all firms trading crypto stopped trading. Now, if you ask me how I know this, it's because my company was one of the larger, in fact, is one of the largest derivative software vendors for people who trade in the hedge fund industry. And back then, we literally saw three-quarters of our customers stop trading and half went bankrupt. That was the context for that second drop. The first drop, well, it probably should never have gone that way in the first place. And when I say it shouldn't have gone that way in the first place, you might ask me, why do I say that? Well, I say that because, well, once again, we'll go to the videotape. If you look at, where are we? Yep. If you look at this chart, which shows the hash rate in blue compared to the price in black, you'll see in the first instance in 17, the price went completely insanely above where the network was trading. And the network, by the way, was about a tenth of where it was today. Then in 2021, 2022, it did it again, completely insane. This little drop here in the blue was the China ban, right in the middle. You see when the China banned their hash rate and knocked it all down, the market collapsed. But what happened, hash rate came back to America and started growing again. And since that point has been monotonically growing at an asymmetric, basically almost asymptotic rate until the AI revolution took over. And now we've had a little bit of a regression in hash rate. It's still a tremendous chart up and to the right. So if you want to compare this fall to this fall to, well, wait a minute, it never actually got above it. Never did. And so now you look at it and you say, well, wait a minute, this time is different. Well, no, it's not different. This time has a completely different mechanism. Lastly, you can look at this in a very simple way. Even if you don't like hash rate, just talk about the power law of adoption. And the power law of adoption, I think, is very useful as well. So let's share this one. Right. Okay. So now you're looking at the power law. And what you're seeing is back in 18, it got way to the top of the channel and fell to the bottom of the channel. And then in 2022, got way to the top of the channel, came almost down, went way to the top of the channel again, fell all the way back to the bottom. 2025. Did it ever get anywhere near it? Never actually escaped, never rallied. Now, why does this matter? Well, because if you're making your predictions on the basis of amplitudes of moves, and you say, well, if it went up this much, then, the old physics, equal and opposite reaction and all that, then you would expect that move to be that way. But if you look where we are today, we're already at the bottom of the channel. So do you want to say that it's going to fall further? Well, I guess anything's possible, but using that chart doesn't make sense. And understanding how the network is doesn't make sense. So now the next question you have to ask yourself is, well, what is sentiment? And the interesting thing is sentiment got worse and worse and worse in all of those cases as it dropped. But sentiment today has been either fear, extreme fear, since basically the end of October. It's had 2 days of neutral readings sometime in January when we had the brief relief rally up towards like 94. And in the last couple of days, it's been in extreme fear readings that had not been seen since the bottoms of those channels and the bottoms of those markets. Now, if you want to understand why that matters, it's because when you see sentiment that extreme, it means everyone is already sold. So who is left to sell? I guess there's some people who were asleep under the rock, under a rock, partied too much in New Year's and have been sleeping for 2 months or sleeping for a month and a half. But the truth is the selling has happened. So new selling is probably speculators. And speculating selling, well, it can happen. The problem with that is they all have tight stops. So if we ever get to a rally, we ever get buyers to come back into the market, that creates fuel for the next rally. Now, I've said it before, and I'll say it again to be clear. I don't expect any massive sharp rally here. I expect a grinding rally. I expect us to stay bouncing around for a while until the sellers get exhausted and stop. In which case, the natural buying interest from people that have beards that look like me will, TradFi folks, will take over. And at that point, you'll start seeing Bitcoin start to rally. Will it rally huge? Not at first. What will be important levels to watch? Well, we'll see. I think that the bottom of the previous range at 84,000 is a very important level. I think the top of that range at 94,000 is a very important level. And, some people like to look at 100. I don't really think 100 is that incredibly important, but psychologically it matters. And then if it clears all that and stays there, I think new all-time highs are baked in the cake. Now, I say this with the skepticism that if everyone starts saying the same thing, I'll start to doubt it. Because frankly, the single best place you can be in the crypto market is a contrarian. And with that, we'll cut it off for tonight. Stay safe out there, and we'll see you again tomorrow.